enlightened requirement is to go beyond the numbers, to bring in greater transparency, to bring in more qualitative factors, to bring in issues which are core to the operation of the enterprise concerned, so as to make the picture holistic in terms of appreciation by whether it's on the one hand the regulator, but more importantly the investors and the stakeholders. And as we've seen, there are various forms of corporate reporting frameworks which have been pushing the envelope in terms of integrated reporting, in terms of business responsibility reporting, SDGs, and the task force on climate-related financial disclosures, etc. These are all sort of part of the metrics. But the objective should be to get a kind of integrated framework of what will be a benchmark reporting in terms of the progression in this area, which we've seen a fair amount of movement over the last 8-10 years, mainly from the regulatory side, but also from some of the corporates.
I think the world has slowly recognized the impact a business organization, a company makes on the entire universe of stakeholders during its lifetime. And once you look at that, and when you look at resources, we often think we are only using financial resources, but actually company uses many resources. It uses natural resources, it uses human resources, it uses societal resources, environmental resources. So there is a large stakeholders of an organization who have generally been muted. Till the world itself, because of, call it activists, call it people who are more concerned than others, this whole issue came to the center of the table. And shareholder is one of the most important stakeholders, but not the only stakeholder for an organization. And that distinction is slowly happening even in the most capital-focused markets, like even in the US or Western Europe. So the first element is, do you have an integrated thinking in an organization where you look at all these stakeholder interests and devise your long-term strategy? And is the strategy an integrated strategy? Does the strategy take into account effectively not only financial performance, but performance on usage of natural resources, what I call planet performance, people performance, and policy performance? Because that's where, when you look at sustainability, you look at diversity, you look at ethics, you look at anti-corruption, not using kids for work. So there are multiple, which are the policies of a company, which can be of great cost arbitrage in some cases, but does it ensure that there is a sustainable, are you creating a sustainable organization?
Companies have done environmental profit and loss accounting, and some of them, I think Puma was one of the first ones to do it, and they've reported it, but when they actually publish their accounts, they don't actually add the two numbers together. One is for context, and the other is the real result. The other way to do it is if you build it into the way that you run the company, then it will come out as the financial result, and all the aspects are integrated through. So that's the other way to do it, and our focus at the moment is building it into existing principles. We're not trying to change the financial system, we are trying to use the financial system to actually account for all these externalities that currently are not accounted for. So it's more a convergence rather than a get two numbers and add them together. But I agree, we are not there yet, and it will take a long time. I think one of the key areas to flag that we've not talked about is language and communication. In that the people who write sustainability reports are normally sustainability people, and they are from a corporate affairs or a communications background. And we found that when we talk about this, if you have sustainability people talking about it, they don't talk the right language. It's too fluffy. It's not detailed enough. It's not in existing the terminology is not right. And the accountants have a particular way of considering these things, and you need an accountant to talk to an accountant in a way. And so it's one of the things that's key is talking to the right people in the right language about the right things. The Financial Stability Board wouldn't be asking for the Task Force on Climate-Related Financial Disclosures if it didn't think that climate risk was not material. If I was an investor in a company, I want to know, does this company have a climate risk? Does it have stranded assets? Does it have a liability into the future? As we implement the Paris Agreement, is this company going to have an opportunity or a risk? So it's clearly of material interest to investors going forward. The problem is that financial information and the non-financial information are very different. They're different in all sorts of ways. They are important to different stakeholders. They are presented in many different ways. How do you bring these two together so that we don't have a financial report and a sustainability report? And how do you bring the two together to actually come up with an overall assessment of value? One way that we're trying to do that is to build the non-financial information into the existing management systems.